Hi and welcome to the Market Alert for Wednesday, the 13th of July 2022. So fake CPI reports spook stocks, yield curve inverts, crude crashes on stagflation scares, and the subhead that 13 basis point of rate cut expectations now priced in for quarter one of 2023. It won't take that long, to be honest, the way things are going on. So anyway, the stock markets were up yesterday until they realised that there was a fake report doing the rounds. A leaked report of 10.2 CPI report was fake, so here's what to expect. The US CPI report will be the main highlight today, and will also serve as what JP Morgan calls a market clearing event. Well, that'll be interesting as well, won't it? So they're expecting the market to fall. Euro USD test parity yesterday as cyclical assets tumble further ahead of CPI for the US today, and US stocks declined and oil slumped on growth woes. The stagflation aspect of that. Well, Euro fended off parity, so it managed to rally a bit there. So the big one today is 130, as you can see there. Forecast 1.1 up from 1.0 from last month. This is a monthly. Month on month, not year on year as they do in the UK. Actually, we've got GDP as well for the UK. It'll be interesting to see if they can pull that one off as well at 0.1 minus 0.3. That's out at 7 a.m. And then also we've got this economic forecast. It's dire. In fact, there was a news item out about this. Let me just see if I can find it for you. No, I can't find it, but I did spot this one. The world braces for Europe's July 22 doomsday. There simply is no substitute available for Russian gas. So I don't know what's happening July 22, but obviously there's some decision coming about whether there's going to be Russian gas supplies or not. But there is another article, but I don't know where it is. There's too many, but it was talking about how bad things are in Europe. But then again, you don't need to have me tell you that, because it's plain to see, isn't it? Anyway, moving on, we've got the gold-silver ratio still up in the 90 area, and let's have a look at the markets. Let's get stuck in and see what happened during yesterday. So let's kick off with the Dow daily chart. Everything was moving up swimmingly, and then I say the fake report of the CPI was confirmed, and the market was pushed back to the 5-bar moving average and the 62% retracement there, with prices currently holding overnight above the 50%. In the 30-minute chart, market moving to the upside, and then confirmation that the report was fake, and then the market was brought back. Prices need to remain above the close. The low has already been looked at, and if we get a close below this, then we'll see prices continue. I'd expect it to be fairly quiet, as it has been at the moment in this sideways range until 130. In the German DAX, similar picture. You can see the DAX pulling back as well, but not as much as we'll see in the 30-minute chart in the moment. But bouncing off the 50% and 62 area yesterday for a nice move of a few hundred points to the upside. Now you can see this in the 30-minute chart as well. We had a bit of a shakeout to start with, market pulling back, and then it was green all the way in the 30-minute chart. So from the low here, we've got 100, 200, 300 points up yesterday on the DAX from the low to high. Overnight pulling back a few points there, and again closed DP, very important, just trading below the 200 MA. To get down to the low is going to take some doing, but saying that, if the CPI report is really bad and they've got to increase by 0.75 of a basis point, that will be enough to send the market to the south side. In the 5-minute chart overnight, you can see there the market stuck in a bit of a range. It's just about 70 points at its extreme, but now down to 30, 40 points. Yesterday's session, well, there's the sell-off that came with confirmation of the fake report. And then yesterday we had a nice trading range, market oversold, overbought. oversold, overbought, oversold, overbought, oversold, etc. So a nice trading range there, and then using the smaller time frames to take advantage of this. And then afternoon we saw the Dow open, pull back, and then move to the upside. The results so far this week are 366.86. It's been a slow week. I've been doing other jobs as well, and of course when you got the CPI numbers out, then also the markets are fairly quiet. Some good moves yesterday, but missed some of those. So there you can see the stats for the week so far, and then since the 19th of January, still 54.46 winners to losers, profit factor 2.34. So the S&P a bit weaker than the Dow as well, but Dow was sideways. This has actually started to move down there, stuck at the 62% retracement, and the 20 bar moving average as well, a break below this, 78.89, and then the lows here, and of course the other lows that are in place here with redrawn fibs as well. 30-minute S&P managed to move up. You can see there the kickoff to start with, and then coming back, putting in a retracement to the 200 MA. We've got two retracements in here. We've got 62%, 78% retracement from the bigger scale there, and then from here to here with a drop off in momentum, and then prices turning red, closing below Monday's low, and then being shook out overnight. But again, at the moment, finding support at yesterday's close, needs to hold here, get back through the DP if prices are to move higher. But again, I suspect it's going to be treading water, waiting for the news. FTSE again, still the strongest despite the political turmoil down in London. The market trading sideways there, holding above the 5 bar moving average at the moment. In the 30-minute chart as well, nice picture here where you've got a nice retracement of 89 with demand, then the market just moving in one direction for the remainder of the trading day. In the yen, sideways for yesterday, got a bit of a retracement there. If we go from the low to here, you'll see the market trading back to the golden ratio of 62%, and then bouncing off this overnight as the Asian market has moved this to the upside. Yesterday's session was a weak one, trading down 100 points as the momentum started to switch. Your divergence there, and you've got your demand, and then the market retracing and coming back, as you can see there, 78% retracement. Overnight prices were oversold at yesterday's close, and then the market moving back up after crossing over with some new buying coming into the market. Recently run out of steam, as you can see there. We've got a supply, and then the selling coming in at the 200 MA as well. So watch for this becoming oversold, with the opportunity hopefully to buy at the DP level for another move to the upside. Meanwhile, the pound bouncing off its multi-year low yesterday with demand there, and the momentum starting to shift, which could be good. We could see the US dollar moving lower, and then the pound getting a bit of a reprieve. As was noted yesterday, market oversold, 89% retracement with demand, with some buying, with a crossover, closing back above the 5 bar and moving back to the upside without the low being breached where you would have your initial stop. Overnight we were, or yesterday evening, overbought, and then the market making its way down until it became oversold here at the DP area, and the market's currently bounced off that to become overbought. So again, look for failure to breach the high, and then potentially a move to the downside, but that would require the dollar to move higher on the CPI numbers at 130. And finally, in the metals, we're seeing a bit of a support for the silver market overnight. Yesterday, another down day. What a surprise. They tried to bring it back yesterday, but it just got crushed again. At the moment, we're seeing a bit of a spike to the upside, but don't hold your breath, because 130, or the CPI numbers, expect yesterday's low to be tested on this one. And gold also trying to find a bit of support there as well. As you can see, sideways in the 30-minute, already traded down to yesterday's low and has just retraced, hopefully trying to get back towards the DP. Again, don't hold your breath, because the dollar, having put in that new high yesterday at 108.37, this will likely be taken out if the CPI numbers are greater than forecast. And the reason for that is that an increase in interest rates strengthens the dollar, and crude oil crushed yesterday, absolutely hammered, which is good news if they would actually reduce it at the pumps for us, and trading to 98.51, so back below $100. It'd be nice to see such declines at the petrol pumps, wouldn't it? But there's definitely some cartel and protection racket going on with these prices at the pumps at the moment. But there you go. But then, of course, it's all traded in dollars, isn't it? And that's strengthening as well. So maybe that's the reason. Anyway, CPI numbers today, looking forward to them, can't wait. It'll be interesting to see how they're going to pull this one off today, and how the market's going to react to it. So let's see what happens. And with that, as ever, thanks for watching, and I will see you in the next one.